Hey everybody, it's Pete. How's it going? Thank you so much for choosing to be with me here today. Welcome to a new Sunday afternoon episode of the Top Stocks to Buy for the current week, the week of June 14th. We got some big numbers this week, some big economic news this week with Jerome Powell on Wednesday. Got a lot to talk about today. We have 5 stocks. We're going to cover the market. We're going to get into sector rotation and the most likely follow through this week, despite the fact that there's big news on Wednesday. I think what everybody's expecting right now is that we're going to kind of pause into Wednesday, and then the volatility in the overall picture will probably pick up after Wednesday. However, the big thing to keep in mind right now is if you are on top of your order flow, if you are paying attention every day and we do new videos, we're talking about reading the tape, we're talking about order flow and being in the right stocks that are getting follow through. Hopefully you were on our channel on Friday when we called out Friday early morning Zoom. ZM had a really good clean follow through. We also talked in a video last week in reference to the solar stocks. Hopefully you participated in some of the solar stocks that we discussed. JKS had a monster move on Friday, looking for some follow through again on Monday and Tuesday, move up that trailing stop loss a little bit higher. We have another solar stock that we're going to call out today. We're going to actually show you how to dig a little bit deeper into setting up your watch list, which is a very, very important thing. But before we do that, we're actually going to get into it. I encourage all the time, every video that we do, I want to hear your comments. I want to hear your feedback because I want to help. And that participating is the only way for me to really hear what your struggles are. What are your obstacles? What are the biggest things that you believe are preventing you from being a profitable stock trader? And the only way to do that is to leave a comment below. So before we get into the top 5 stock picks for the week of June 21st, we're going to go right into this little disclaimer and stick around. We'll be right back. Okay, so first we want to talk about the idea of losses, the idea of trading losses, and the idea of, we all know that golden rule of trading: keep your losses small and let your profits run. The question is, how do you let your profits run? When do you let your profits run? However, the challenge before that is being disciplined to get out where you're supposed to. So I'm actually going to show you a question that somebody left a comment on last week. And like I said, I promise we'll get back to everybody as quickly as possible. But here's where we're going to discuss. You know what? Let me make it a little bit bigger so it's easier to see. So this came from Peter Ramsdell late last week. I believe it was Friday afternoon. Having trouble getting out of losing trades. More often than not, end up riding them to tops and bottoms. And you can see the whole thing, right? So the biggest thing we want to focus on here is having trouble getting out of losing trades. And then is there any strategy to use to screen or search? Usually find the biggest losers, the biggest winners, and high volume. Feel like I'm missing something. So there's a lot to unpack in here. We're going to first start out with getting out of losing trades, and then we'll make our way into scanning. Okay. So first thing I want to talk about is I recommended to Peter to visit this page, and I'll post these links below the video. And specifically, first you go to our stock trading for beginner page, and then you click on over here right on the top where it says the secret of 10 perfect trades. If you are struggling right now with exiting trades, if you're struggling with exiting trades that move against you, I just can't stress this. And I'm going to say this and as passionately as I possibly could. That video, I'll leave the link below. That video will change your trading life forever. We've all been at that point where we know what to do. We know that we're supposed to take our losses and get out of the trade and then go to the next position. The problem is up here. The problem is our ego. The problem is we're trying to be right. And I don't want to get all psychological and all that garbage. I'm going to keep it real, and I'm going to talk to you like you were my best friend, like you were sitting next to me at my trading floor when I had my business in New York City. The bottom line is this: the only reason you don't exit trades that are losing trades where you're supposed to is because you never believed it was going to be a loser in the first place. You put on trades fully expecting every trade to move in your direction, and when they don't, you freeze. And when you freeze, you hold on to it and you turn what is a swing trade or maybe even a day trade into a longer term trade because you couldn't make a decision. What I'm going to show you and what we're going to talk about, again, I'm going to show you this really quickly. This is the secret of 10 perfect trades. Once you understand this concept and you understand the difference between 10 perfect trades and what you see here, which is all of these garbage trades that you know you shouldn't be taking in the first place. Once you understand the difference between the two, trading becomes easier because now you're not, oh my gosh, it moved against me. What do I do? Every time you place a trade, prior to putting the trade on, you need to say to yourself, a trading loss is a business expense. If you have that in your mind and you say, okay, I'm going to risk, I'll just throw a number out there. I'm going to risk $300 in exchange to try and make $900 on this trade. So my risk is 300. My initial profit target would be a $900 profit. So that's 3-to-1 risk reward. Here's the key. You need to accept the fact that $300 is at risk. Once you do that prior to the trade, then every trade is just a matter of now adjusting your share size, adjusting your position size on a $300 risk. And the share size goes up or down based on the distance between the entry price and the stop loss. So if you're risking $300 for a $1 stop loss, you'll have 100 shares. Pretty simple, right? And you adjust it up and down that way. Here's the key. We all know this, right? We all know it, but you need to shift how you see losses. Once you watch this video of 10 perfect trades, it will explain to you our job over time, assuming we have an edge. Now, my edge is order flow and tape reading and volume and price action. That's where my edge is. If I do what I'm supposed to over time and keep my losses what they're supposed to be, even within those 10 trades, there's going to be some losers. But if I know a loss is nothing more than a business expense, if I know I did exactly what I was supposed to, I take the loss, I go to the next trade. I take the loss, I go to the next trade. You need to understand a losing trade doesn't mean you were wrong. It means that entry, that particular entry, didn't follow through. So get out of your head right, get out of your head wrong, get out of your head you didn't see something or miss all of that. Get that out of your head. If you have an edge, again, our edge is order flow. If you have an edge, you're only looking for follow through. If you get follow through, you manage the trade exactly as you planned. If you don't get follow through, you scale back or you get out. Here's the key though. You need to accept the dollar amount prior to the trade. Put the trade on, accept the risk, look for a profit. Put the trade on, accept the risk, look for a profit, look to manage the trade. I'm going to put this link below the video, and I would really, really love to hear from you in the comments after you watch that video, because you will never see trading or trading losses in the same way. When you think about losses from the context of it's a business expense, and you who is watching this video right now is running a trading business, again, it's easy. You have revenue, you have expenses. You have revenue, you have expenses. It's a question of keeping those expenses what they're supposed to be while you're learning how to make your revenue bigger, which is earning more on those winning trades, which takes me to the next thing, which is order flow. One of the things that Peter mentioned in the statement is he said, I'm chasing gainers. I'm looking for price gainers and I'm looking for losers. I'm looking for something that's moving big on the long side to buy or big on the downside to short sell. This chart, which was actually brought up to us by somebody in our private community, in our swing trading community, is a great example of the single biggest problem that I see when new members come into our community. If you want to learn more about our community, click the link below the video. I'd love to see you on the other side. You can try a 30-day trial. No pressure. If you want to find out, just click the link. But this is the chart that I want to point out. He asked me if this trade, based on running those same kind of scanners that Peter was talking about, is it a good idea for a new swing trade? And the answer is absolutely not. This is the difference between being a chart reader, running scans, versus being a trader, going to find risk, reward, probability, and money. This stock right now is up 1, 2, 3, 4, 5, 6 days in a row into a price where stock sellers keep shoving it down, shoving it down, shoving it down. This is by far the single biggest mistake that new members of our community have, and traders in general, but I see it a lot because I'm coaching a lot of the members in our community through this kind of thing. This is too late. The reward potential on the trade was here, whether it's 94 or 95. That was the reward potential. The more days in a row and the closer it gets to the expected reward potential, because remember, this is the way we talk about it. Sellers smacked it down here. Sellers smacked it down here. Sellers smacked it down here. Sure, it could go through there, but we're trading for the probabilities. This is not a good swing trade on Monday, June 14th. It may be a day trade. We call this the bullish echo. You're going to trade the echo off of that move to the upside one more day and then wait for it to pause for a few days before you initiate a new swing trade through that level. So these are the kind of things that you need to look for when you're watching new ideas. It's not enough to just say, I'm going to go look for the gainers or the losers. This is where you put on a trade, moves in your favor one day, pulls back for 2.5 days, you get stopped out, and then the stock does exactly what you thought it was going to do. Raise your hand if that's happened to you. It's happened to everybody. It's happened to me. You put the trade on, it fit the criteria, but you didn't look, you didn't read the tape. You didn't perform that tape reading. You had some order flow. You had 5 days of buying. That's a good initial push of order flow. But what is the likely profitable trade if you put it on now? After 6 days into resistance, it's not a good idea, despite the fact that it's probably one of the strongest stocks over the last 5 days. It's that last piece you have to put together that separates you from everybody else who's a struggling chart reader, because you're putting the pieces together. Order flow, tape reading, initial risk, accepting initial risk, and having an initial profit target that justifies accepting that risk. It's all of those pieces together. Remember, we talk about it, building an argument for a good idea. Now we're going to head on over. And, oh, by the way, if you happen to like these videos, I would really appreciate if, again, give us a comment. Let me know what you're struggling with. If you could subscribe, that would mean the world to me. Give us a thumbs up, subscribe, and make sure you hit that alert because we have new videos coming out pretty much every day. And I think you'll get an email or something like that. I would really appreciate it. So we're going to head on over to the sector rotation as we start out every video with. And you can see this is where we ended up last week. So just to give you some feedback, the week means the last 5 trading days in healthcare, real estate, and technology in the top 3. We're going to actually focus on a healthcare stock today, and then we're going to work our way into a little bit of technology. But what's interesting to see here is that basic materials, financials, industrials have fallen off a cliff. Energy, which was super strong and probably one of the easier stocks to identify order flow in for a while there, also kind of fell off a cliff. So we're staying away. Again, this is the, dare I say, easier way to trade, where we're not guessing. We're simply piggybacking where the smart money is already doing something, even if it's run like it did for the last, like in the chart we just showed you. You step back, you have a tracking journal, and you have a trading, tracking journal and a trading game plan. So all of the stocks we're looking at are potential candidates. The one that we just looked at already went too far. So that goes into the tracking journal. The stocks that we're going to talk about now are in the game plan, which means that we're going to create actionable ideas. Okay, so remember, there's 2 different things. Just because a stock didn't trigger today doesn't mean that it's not in play. It just might not be in play today. Also, don't forget about this, because we had this come up a lot in the last week, and it's kind of, I get excited because we have lessons right from actual trades. You get stopped out on a position, and you're like, and and then you go find something else. When you get stopped out of a really good trade idea, just because you got stopped out does not invalidate the idea. It means that entry, that timing didn't follow through. So write this down. This is really important. When you get stopped out of a really good idea, set an alert immediately at the price you would get back in where the risk reward makes sense. It might even be the same exact spot, because raise your hand if you had that one candle, that one big red candle that comes down, takes you out, and then 2 weeks later the stock's up 10% without you. Set that alert. Be really diligent. When you get stopped out, you put it right back in there and you get back into the trade. So this is the kind of stuff that we do every day. This is the exciting stuff. It's not how do I read a chart. It's how do I actually learn how to trade. We're talking about how to make money when you buy stocks. And that sets up with you get stopped out, accept the risk, you get stopped out, put that alert right back in. Now we're going to head on over to the screen and we're going to take a look at the stocks the top 5 stocks that we're actually going to be watching for the week of June 14th. Okay. So that's the chart of fate. You could actually take a look at that. The first one we're going to take a look at this week, interestingly, this is kind of cool too, is it actually had a little bit of negative news last week, but as of right now, it ignored the negative news. And you know what? Bull moves happen when bad news gets ignored. NCTY, we're looking for the first piece on Monday, a little bit of resistance around 26, 27, and then ultimately looking our way up to 35 area. Again, moving averages are not in the right order here. That's okay, because look at the bottom. We're reading the price action. We're reading the tape. You can see everything that we have on our screen right now, and we finally punched through. Stock number 2 that we called out last week, STEM, STEM. This is great. Look at the earnings here. Rally off the earnings. a push and a pause, a push and a pause, a push and a pause. Now, Friday gave us some good price action. We're looking to a new entry above 34 and an ultimate target of right around 46. Now, you can see the normal move in this stock is roughly $8. So if we get the entry around 34, a normal move would take us up to around 42, which is this gap fill. That would be the first initial profit target in exchange for taking the risk. But I think if we do get a good push, we get more good price action like this, we should see follow through. I'm going to come back in a second and give you a reminder about entry prices. ENPH is stock number 3. But before we get into that, I want to point this out. This is super, super important. I know I mentioned this last week, and I'm going to talk about it a little bit again today because it's that important. I'm going to zoom this in so you can see it a little bit. We have spent a lot of time. I'll just come back over here just for 1 second. We've spent a lot of time teaching you the stock market power pyramid, which is the market, right? The big, broad indexes in the market. So let's say the S&P 500, the Dow, and the NASDAQ. That's the bottom part of the pyramid. Just above that, you have the sectors, which is what we just reviewed. So you have those two as the foundation for the argument that you're building for a good idea. Then above that, you have the industry groups. And then above that, you have just the individual stocks. So what we're looking at right now on the screen here are the industry groups of the electric vehicle stocks, cannabis stocks, and solar stocks. So right now, we've mentioned already, excuse me, JKS, ENPH, and CSIQ are considered the leaders there. So we're working our way through there. Last week, we talked about Tilray, has not really done that much yet. But look at the electric vehicle stocks. Look at across the board how many of them are moving in the same direction. The big question we got before in Peter's question was, how do I hold winning trades longer? It's building watch lists like I just showed you. You pick your one stock, Ford, GM, or whatever it happens to be. Find all the other stocks in that industry group and put them into a watch list and pay attention for the day, the week, and the month. Is order flow, is real money being spent at higher prices? Are they holding up higher lows? That's the first parts of understanding how to spot order flow. But when you find it in an industry group, pay attention because that's where smart money's already doing something. And that's where you want to just find a spot, piggyback, and learn to hold those trades. Those are the trades that get better follow through. If you take a look at CSIQ from, JKS from Friday, you will see that we called it out. And Friday, it was up 12% and roughly $5 from the previous, from the previous close. So that's where the power of this watch list comes in. This is critical to understanding how to be more successful as a trader. Okay, so ENPH is stock pick number 3. That was a long story into a powerful lesson there on actually having the right ideas. So ENPH above this breakout level here, which is right around 148, 149. We're looking for it to make its way back up here. The gap fill is around 170, so plenty of room to run there too. Sticking in that, we just showed you the electric vehicles, sticking into the electric vehicle stocks. BLNK had some really good news about a week and a half ago. You could see what it's doing since earnings. It's maintaining this bullish order flow, a push and a pause, a push and a pause, a push and a pause into a rest on Friday. We're looking to enter the first piece tomorrow and then looking to add over 44 with a run hopefully up to 52 if we get follow through. We actually mentioned healthcare stocks before. Last week we were watching Moderna and we were watching Lilly, which Lilly had a really 2 good days out of it. But now we're actually shifting over and we are looking at NVAX. NVAX actually, now you can see it actually did the opposite of what we said that other stock. So I just want to give you a really quick visualization here. If you take a look at that other stock, the stock is rallying and hasn't paused yet, and it's hitting into resistance. So we're looking for the stock to have one more day, pause, and then take off. And if you look at what NVAX did, NVAX actually rallied, now paused for 3 days, and now we're looking for a rally in NVAX up to that 240 area. So that's the top 5 stocks that we have for this week heading into June 14th, 2021. NCTY, STEM, I'll leave them below, ENPH, BLNK, and NVAX. Also, don't forget, I'm going to leave the video links below this. You could start out with Stock Trading for Beginners. There's a whole bunch of good education there, but you really want to start out with that 10 Perfect Trades video. It will forever change the way you see trading. And this, I promise you, it will make trading a lot less stressful. It will make it easier to follow your plan because you're not going to be stressing out over every single trade. And that's really where we all want to be as traders, right? We want to just be running a business, managing our expenses, and learning how to increase that bottom line and see your account go higher and higher and higher every month. So thank you so much for choosing to be here with me today. These are our stock picks for heading into the week of June 14th. Thank you so much. Please leave a comment below. I'd love to hear from you. Let me know what your biggest obstacles are. Give us a thumbs up if you like this kind of content, or also let me know that I'm producing the kind of content that you like. And please subscribe. It would mean the world to me. And hit that alarm so you can get updates when we put out new videos. Have an awesome day and having an awesome week, everybody. Oh, one thing that we forgot, FOMC on Wednesday. Be aware of that heading into the week. All right. Have an awesome day, everybody. Take care now.